50 basis
0.5%.
points. 0.5%, Jeremy.
0.5%.
0.5%. And we are live, Jeremy. We are live.
Morning, Nathan.
It was evening. It's evening now. It's evening.
Always morning in my life.
Hey guys and girls, thanks a lot for tuning in for this week's Tuesday Night Live. I am here with
Nathan, I'm good to be here.
Good to have you. I think everybody loves having you on board. Like
I
everyone
don't know about everybody, but I certainly enjoy doing it. I enjoy my clients. I love them.
I think we get a lot.
Rich.
I think we get a lot more viewers when you're on.
I don't know about that. I don't know why if they've got nothing better to do, then that's good. It's good.
They just like the show. They like the show. So
we'll be getting news they don't normally get on Channel 7, that's for sure. Even on mostly alternate networks they don't get.
Well, that's true, right? They don't have it. If they do talk about what we talk about, they're normally they're either thrown off or they just don't get it. Like they're really depressing. Like you hear people that talk about the things that we talk about, but they're just whinging about. There's no solution.
There's no
solution.
That's
they
what
just
we
sit there and whinge.
solution.
So on that note, guys, got some interesting news to talk to you guys about, and I feel like a lot more people tune in on interest rate day because they think that I have something to say about interest rates. But that's going to be the first thing I talk about with the news article from the Reserve Bank. And every time I look at it, it always interests me, this logo, right? The three-sided, three-pronged logo that looks like the devil. Look at that. Don't you think it looks like the devil?
It does.
Upside down anger.
And the Knights Templar as well.
Knights Templar, all those controlling entities that are up the top that we don't know about.
And like a ninja spear as well, one of those ninja
A ninja stars, yeah.
Ninja star.
Well, it's interesting who controls the place, right? And a lot of people think it's their government or they think it's their rulers or whatever, but they don't realise that all of the peasants, are capped. The middle management, which are not even, they're like
the Australian government is middle management.
Yeah, it's lower. It's it's the upper management of the poor class, and then there's a ruling class that's much higher than that. Which anyway, today's RBA meeting came in to say, as this meeting today, the board decided to increase cash rate by a target of 50 basis points to 2.35%. It has also increased the interest rate on exchange settlement basis by 50 basis points to 2.25%. The board is committed to returning inflation to the 2 to 3% range over time. It is seeking to do so while keeping the economy on an even keel. The path to achieving this balance is a narrow one and clouded in uncertainty, not least because global developments, the outlook for global economic growth has deteriorated due to the pressures on real economies from inflation, the tightening of monetary policy in most countries, Russia's invasion of Ukraine. We've had inflation, guys, because Russia, it's all Putin's fault, right? It's Putin.
Always Putin's fault. He's cut off his gas.
And the containment measures and other policy challenges in China. So the reason why we have inflation that's so high, which we saw happening before 2020, right? We talked about it back then. But the reason why is because of Russia, because of Ukraine, because of an illness, because of China. Nothing to do with the fact that they've printed more money in the last 2 years than what they did for the 200 years prior. Interesting that. Inflation in Australia is the highest it's been since the early 1990s and is expected to increase further over the coming months ahead. Global factors explain much of the increase in inflation, but domestic factors are also playing a role. There are widespread upward pressures on prices from strong demand, a tight labour market and capacity constraints in some sectors of the economy. Don't you find it weird, Jeremy? Like, you speak to the clients on a daily basis. Yeah. Most of the people that come to us, I find it interesting the amount of people that come to us that actually don't want to work. When we first started the business, going back when you first started here, Jeremy, like years ago, you weren't getting people saying, hey, get me out of my job because I don't want to be having my body mangled, right? You never had that. You had people coming and say, I just want to retire, I want to, retire early, whatever. And now we have so many people that go, I've got no job because I was forced to take the carrot.
Yeah, right? Did that. I mean, there's always been the element of people that are in jobs that have a limited supply, like a lot of the tradies and stuff, who know that they've got a limited life and they want to be able to
take the active income, make it passive.
Yeah,
but we're now at a position where they're saying that we have a tight labour market. Well, the tight labour market said all the people left. There's no teachers because there's not enough teachers because 20% of the teachers didn't want to go get, and then 20% of the nurses didn't want to, right? And they've lost their jobs. Anyway, there are widespread upward pressures on prices from stronger demand. We'll cover that. Inflation is expected to peak later this year and then decline back towards the 2 to 3% range. The expected moderation in inflation reflects the ongoing resolution of global supply chain problems, recent declines in some commodity prices, the impact of rising interest rates. Medium-term inflation expectations remain well anchored. It is important that this remains the case. The bank's central forecast for CPI to be around 7.75% over 2022, a little above 4% over 23, and around 3% in 24. The Australian economy is going to grow solidly and continue. National income is being boosted by a record level of terms of trade. The labour market is very tight. Many firms are having difficulties hiring workers. The unemployment rate declined further in July to 3.4%, the lowest rate in almost 50 years, job vacancy anyway. Who wants to listen to this sort of stuff? Good luck to them, right? I'm going to take us on the article. The third article from today is going to change that. I'm actually going to pull that article and make it our first one because that's very important. It goes off the back of what we've just seen here, right? I'll bring it number one, but we'll just... What are our thoughts on all of this, right? They are pushing this monetary policy that they've got, which is a tightening policy, which is very different to what it has been for the last 2 to 3 years. Sorry, my screen has disappeared. Which is now going to push us into, going back in 2018, 2019, I talked of the global financial depression, which was a depression of biblical proportions. I think what we've seen, would that be of biblical proportions, what we've seen in the last couple of years?
Not quite biblical, not quite 1930s, but
no, what we've seen, not economically, just worldwide, like biblical,
and more to come.
Yeah, more to come. It's going to get a lot worse. And here we are with an economy that they're trying to control the inflation, but they're not winning at that game. The problem that they're going to have is everything is starting to fall apart, and a lot of people now are scared of interest rates. One thing that you and I haven't seen, Jeremy, is that on a day-to-day basis, we're wrapping up deals, we're doing deals with investors and whatnot. We're still losing. Would you say we're losing more deals nowadays, or less deals?
No, we're losing more deals.
Why?
Because the people wanting to solid assets for a start, because of the building crisis that there is, that people, the supply chain, meaning that the building costs are going up. We know it from people getting work done in the office.
Yeah.
That what was going to take, 4 weeks to do is now taken 3 months because they underquoted so badly. The costs have gone up so much that there's no point in trying to build something new. So the existing dwellings are being snapped up all over the place.
Because the inflation rolling over with cheap credit still.
Yeah.
We're still at the same interest rate as what we were. We're back to an interest rate now with all these interest rate increases, we're back to where it was 7 years ago. So interest rates today are basically where they were 7 years ago.
So
most people are scared.
So 2015, essentially.
Okay. Yeah. So interesting time.
At the height of the boom.
At the height of the boom.
Yeah.
But that was before they had to put in APRA. But what we're seeing them do now is unwind all those policies, right? So they put in APRA, we're going back up with the interest rates, but then the monetary policy is going backwards, and there's extra things that are being put in the market. So my concern level is that as the central banks would talk about inflation, that this is transitory, right? It's it can't sustain at this level. So something has to give, right? You've now just added to businesses pressures which have debt. They could have gone up triple. The amount of debt has tripled in the last few months. And it's exciting. I'm excited by it, so I'm not concerned. On that note, we talk about a shortage of labour. We're talking about a large debt that we need to repay as a nation. What do we do in order to lower our debt? What do we do to lower our, do we increase taxes? Because we increase taxes, we're certainly going to see a crash, right? We've increased the cost of everything here, right?
You can't do that. They're bringing more people.
We're bringing more taxpayers, right? Everyone's a tax slave. I need to be very careful how I say this, especially in the ears of Jeremy, because he'll turn it around on me. But we're all tax slaves. We're all tax slaves. The only way we can't grow tax slaves quick enough, so we need to import tax slaves, right? And
basically into the cities, and they're looking because of the CBD.
Correct.
Everyone's
so imagine
decentralising.
Correct, right? And then we look at if they were to bring migrants in, where would they go to? They'd go to all those areas like around Sydney that are full of migrant central, right? Whether it be those Bankstown areas or Fairfield or Liverpools or Parramatta's or Penrith or Mount Druitt's.
West of George Street is what they want, where they want to put them.
West of the bridge.
West of the bridge, yeah.
West of the bridge.
That's what they always have. They always have their train works and their routes into the city closed off on weekends, so they don't have any of the Westies. They don't want us any of them coming east.
It's actually a very interesting
It's always
place, Jerry.
do that. They do all track work's done on weekends.
We've got news coming out now, guys. Look at this. I don't know if you've seen this one, Jeremy.
Yes.
Permanent immigration intake boosted to 195,000 per year. So that's just at the moment, right? There are talks of 400,000 migrants a year. Imagine 400,000. I remember in the 1990s, and you'd remember a long time before that, Jeremy. But I remember
I was in Texas in the 1990s. I don't remember the 90s.
I remember when it was like 1995 or something. We
Yeah.
crossed like 19 million people or 20 million people. That was like 25 years ago, right? We've had 5 million people. Imagine we add 200,000 people in 10 years. That's 2 million more people. We've gone up another 10% of population. But if they go to 400,000, that means there's a million every 2.5 years, right? Every 5 years, there's
They've done a deal. This is what I understand. They've done a deal with the Chinese because of Hong Kong, because of all the problems with what's happening in Hong Kong.
Yeah.
They want to bring, because they're very much economically, the Hong Kong policy, the British policy is very much aligned with our and the Western ideology. Chinese goes, let's get rid of them all.
Yeah.
We'll send them and we'll take them in. And a lot of our major cities within the CBD will be populated a lot because they're going to do that with the.
We'll just fill them
big,
all up.
Well, those big office buildings that are now got 10, 12 floors empty because they don't need them anymore.
Yeah.
They're going to turn them into residential areas. There's going to be developments.
Well, even just the residential areas that have been soft, like we're still buying in areas. Jeremy, before I came in to see you today, before we popped in the office, I just got a deal for $265,000 in Sydney. Oh, it's a 1-bedroom unit, right? But it's in a good
unheard
location.
of.
265,000 in Sydney, rent for like 320 a week, right? Those properties, they're the ones where we know that migrants used to be at. We know that going back in 2015, a unit that would sell, there was a property, Jeremy, without going into details, one of your investors pulled out the other day because it had a bathroom leak, and we got it down from 310 down to 290.
And then another $2,000 taken off that.
So 290 grand for a 2-bedroom property. The owner previously had paid 370,000 for it in 2015, and other sales in the block had been 460 grand. So for us to pick it up at 290 when other sales, we've seen a boom, we've seen everything go up, we've seen interest rates come down, we've seen rents go up. But for that property, imagine when you start throwing all the migrants that were disappearing from those areas
back into them.
Right? That's the interesting thing. Permanent migration cap will increase from 160,000 to 195,000, which doesn't seem much, but it's gone up 20%. That's 160 to 195. There's 20% difference. For this financial year, in a bid to fill immediate gaps in healthcare infrastructure and the technology sector, Home Affairs Minister Claire O'Neill has announced. The cap may stay high for subsequent years, but those decisions are yet to be taken. I actually called this way before. I said they'll import more tax slaves who can't breathe quick enough.
They do. I think a lot of them are going to be in sort of like skilled areas. It's not going to be like bringing in all the villages of Lebanon, and you know what I mean, and east of Java, whereby it's not going to be sort of like the lower end of the economic docile. They want to bring in skilled IT, finance, healthcare, as they say.
Obedient people. That are going to contribute.
Obedient but well-educated people who are going to be paying a higher end of tax.
Yep.
You know, and not go on welfare. They're not going to.
Exactly.
They don't want people who are going to be claiming compo within 18 months of getting here. You know, that's not in the 195,000.
The increase for 2023 will allocate an extra 5,000 places for the healthcare sector, another 6,000 additional places for workers with skills needed to deliver vital infrastructure, 6,800 places for the tech sector. Regional visas will increase.
9,000.
Regional visas will increase by 9,000 to 34,000. There'll be another 5,000 skilled visas enabling various businesses to sponsor permanent employees. State and territory sponsored visa numbers will increase from 11,000 to 31,000. So there's 20,000 there, 9,000 to 34. That's another 25,000. That's in regional areas.
Yeah. The oranges are rotting on the ground in Griffin because they've got no one to pick them. They're paying $50 an hour.
All I can imagine, Jeremy, is all those motels I bought in all these regional areas. Ka-ching, ka-ching, ka-ching.
Ka-ching, ka-ching,
Ka-ching,
ka-ching.
ka-ching,
Well, I
ka-ching.
know. I'm going up there next week, and I tried to book into the Demi View, and
There we go. Like,
It's
I've
booked
got other
out.
ones up there. I've got other ones up there, Jeremy.
Yeah.
There's the Daintree,
well, I'm not going that far. No, I'm not going.
Port Douglas.
Yeah, I mean, I'm actually probably am going to stay. At
I've
Port
got the Port Douglas
Oh,
Resort
great.
there.
Yeah.
The Birch Resort, Port Douglas.
Birch Resort.
It's
I'm
got a
gonna get
diving. It's got a diving resort. It's one of my favourite ones.
It's
Great
got
one.
a diving.
Yeah.
yeah,
It's
I'm
actually a
probably
brand
gonna
new
go-
diving pool. It's got all the scuba gear, everything there.
So you can go learn to dive.
You can learn to dive, yeah.
I'm not going to get on.
If
to
you
it,
don't
that's
like
fine.
someone with you, just
Turn off their
the
oxygen.
tank and see you later. No, I'm joking. Where's all those politicians today? No, I'm joking. I'm joking, everyone.
Kind of.
Joking.
Where are they?
Who knows where they are? They're on long service leave. That's where the Prime Minister is apparently. Next article: the NAB drops variable mortgage rate, but there's a catch, right? I've seen it say now CBA, now NAB.
Yeah,
We've got all of
well,
them starting to drop. A big group of mortgage holders are being warned their banks could be taking them for a ride. Here's why. One of Australia's biggest banks has followed the lead of competition and cut variable mortgage rates, but there's a catch. NAB is offering the reduction of variable home loans by 30 basis points for new customers only. So that means that if you are a mortgage holder, if you do have a mortgage, you would want to be proactive in trying to take your loan elsewhere, refinance with a different bank to get a better mortgage rate. So, it's only 30 basis points, but when you see the interest rates go up over 6 months and then back down over 6 months, that 30 basis points on a 3% mortgage is still 10% difference. I'll get on another point in a moment, but reading this article, how do they say existing variable customers have seen their rates rise by 1.75%
Yes.
points on average over the same period, blah, blah, blah. What I see with a lot of people at the moment is that they're freaking out about interest rates, right? Interest rates have gone up. They've gone up for 6 months,
Yeah.
5 months out of 6 months. They've gone up by almost 2%, which has added a fair bit on top of the average sort of rate. What you got to think about is that if you own a mortgage over 30 years, right, there's 6 months out of 30 years, right, they go up, they go down. What's the average rate going to be over that period? And looking at it, I know that once they start the other article, this next article that we're going to read into, goes nicely off the back of that article that we just read, that we will start seeing a massive, massive recession, and they're going to have to slash rates harder than what they ever have in the previous. Not that I believe anything that comes in the news. It's just interesting to see other people's opinions and why. So it's mainly the data that I'm trying to pull out of this. Get ready for the first rates-led collapse since 1991. We're seeing a massive crash, and interest rates have gone up to 3%. 2%. The
fastest
CBA,
rate.
the RBA, sorry, the RBA rates are now at 235 basis points, right? 235 basis points, and we've got the biggest crash going on, right? It hasn't even hit fucking 2% yet.
And they've already, but this is the biggest, sudden rate rise since the early 90s anyway.
Well, it was 10 basis points beforehand. Now it's 235 basis points. That means it's gone up 2,350% in 6 months.
Yeah, because they're panicking.
Yeah. This column has been warning since 2019 about the rise of zombie companies kept alive by perpetually cheap money, right? Perpetually cheap money, right? That's been thanks to the near zero interest rate and the QE to infinity policies of profligate central banks in the period following the GFC. The worry is that the interest rates will now normalise. Many of those zombies could fail to survive, creating waves of corporate defaults to the likes of which we have not seen since 1991 recession in Australia and during the GFC in the US. So when we look at it every day, there's
A zombie apocalypse.
There's a zombie apocalypse. If it's not from people, it's about the companies that are out there. What we haven't seen yet is the stock market, right? And that is our next article, which is a very interesting one about the Vatican, actually.
Yeah.
But we haven't seen reporting of the financial year of the stock listed companies. So imagine when we start seeing, all the stock listed companies giving in their reports, and they're showing that they're broke and that they're dying. Where are we going to go to from there?
Well, it's going to be interesting because most of the top 200, because of the superannuations and stuff, everybody's going to have their money keeping these companies afloat, whether it's BHP or anything. It's mum and dad supers stuck into these companies. That's what, and they've got to make, under Keynesian policy, a 4% increase every quarter, in order to be able to keep paying into the mum and dad super.
Yeah.
So it is a giant Ponzi scheme, but they're ripping out as many minerals as they can, like that rare earths. What you've seen just with Hastings has gone up like 2,000% in the last four months. Because of the necessity that they need for their tech sector.
Yeah,
it's just a giant quarry for China and everything. Anyway, all the resources.
People think that we're the peasants of the world, and they send all the convicts over here, all the slaves, right? Nothing ever changed, right? We're now
Nothing
the slaves.
has changed.
Everyone goes, "Oh, we're buying something off China. We've got the slaves over there. They make all our stuff cheap, whatever." We're the slaves. We're the ones in the ground digging it out. We're the one with the resources. We're the ones that's Yeah, well,
once upon a time, the coal miners were the people on the ground, the poorest of the poor. Now they're in the 1%.
Exactly. The standard definition of a zombie company that meets two tests: it has existed for more than 10 years and it has an interest coverage ratio of less than 1 for 3 years in a row. ICR is defined as the ratio of the company's earnings before interest and tax, EBIT, relative to the interest, note not principal repayments on the debt. If the firm's ICR is less than 1, it is not earning sufficient income to repay the interest due on its debt, hence the zombie moniker. Using this definition, Coolabah finds that over 13% of all ASX listed companies are zombies. 13% of the ASX is a zombie company. So when people ask me, "Oh, Nathan, what shares should I invest in?" It's like, fucking hell. I want to own something physical, right? I don't want to be in a Ponzi. Everything's based in a Ponzi when you're dealing with cash.
It's a casino.
Which is slightly above the number of zombies we find in the US. Just under 10% of all listed firms in the US stock market are zombie companies. A US analyst includes New York Stock Exchange and the NASDAQ listed companies. The age constraint on zombie companies does not make a great deal of sense. Just because you're a youngish, high-growth firm, if you're not generating sufficient profit to service your debts, you are still technically a zombie. So in our first adjustment, we remove the minimum 10-year age concentration and simply focus on all firms that have reported ICRs less than 1 for 3 years in a row. In Australia, an incredible 35%, 34% of companies in the stock market are zombies. They don't even meet 1% of EBIT. After identifying the zombies, we then studied their propagation across both industry sectors and by size or market capitalisation. This analyst reveals that zombies tend to be small to medium-sized companies. They also found in greater numbers in technology, energy, healthcare, real estate, and materials industry sectors. Either a good guy or a bad guy. One final point is that if you distribute the firms by their ICRs, you find that there are a lot of very risky zombies constrained against a significant number of incredibly low risk firms, and not as much in between. It seems that in the corporate world, you are either the good guy or the bad guy, or more, maybe we are saying there is a lot of deep value stocks and loads of junk like growth wannabes. Given the outlook for interest rates, it's hard to imagine that there will be much global growth for the next year or two. Recessions are more likely. This has implications for the markets. As interest rates continue to decline, we are likely to see the first interest rates-led default cycle in Australia since 1991. In the early 1990s, ANZ and Westpac almost went bankrupt because their loan exposures to the commercial sector. Since the 1991 recession, we've seen big increase in non-bank lenders who finance zombie companies. With the RBA set to preemptively raise interest rates by 50 basis points for the fourth month in a row, imposing an extraordinary 225 basis points of rate increases on suspecting borrowers, the great Aussie housing crash is only going to get a lot worse. The individual capital cities' losses have been breathtaking, a bit consistent with higher concentration, contrarian October 2021 prediction. For a never-seen-before 25% decline in national dwelling values. Indeed, dwelling prices declined in every capital city across Australia, with the only exception being Darwin. Well, we haven't seen it. We haven't seen it.
We haven't seen any of that.
Haven't seen it. I want it to happen.
Darwin's going to be, it's designated for one of the first smart cities.
Poor bastards. Poor bastards.
Good luck with the wildlife that's up there.
It'll be more scorched than what it already is. Maybe those crocodiles will get a third eye.
With anything, the insect life alone up there. So good luck.
Sydney losses to exceed 10% in months. After Sydney homes values fell by staggering 2.2% in July, the biggest drawdown since 1983, the losses accelerated in August, with the final monthly decline coming in at a credibly 2.3%. Jeremy, I was getting sent deals, right? I encourage people, right? Go out to look in Mount Druitt. Go and look in Mount Druitt for a unit, right? The cheap, shitty units that start out in Mount Druitt. You can't buy under 360, 380, 400 grand. They're going up out there. Penrith, Kingswood. Someone sent me, it's a good deal at 340 grand. I'm like, why would I pay that? I just spent 290 grand on a unit in a much better location closer to Parramatta. So why would you want to go do that?
But this is what the media's always the same.
Exactly.
Everything is about crash in the property. They've never predicted a boom ever. That's always about, it's either we're heading into a bubble that's going to crash, or it's in a bubble and it's going to crash.
There are people that will crash. There are markets that will crash. They're the people that are too over-leveraged, too under-leveraged. They've got a mortgage for $1.5 million in Kellyville or Box Hill or somewhere like that.
When you're paying, or you're paying, you got your rents at $800, $900 a week to make your interest-free payments.
Yeah.
That's where you're going to be really screwed.
Exactly. So, someone here said, yes, the Mossman Demi-View. That motel at the Mossman Demi-View, that is a Birch Hotel. That is... I was going to actually change the name of the Demi-View Motel to Birch Motel Mossman, right? And then everyone said don't change it because everyone loves it because it's a view of the Demi Mountain. So, but that motel, it becomes mine in about 3 or 4 weeks.
It's in Front Street, Mossman.
Exactly, 41 Front Street.
Yeah.
41 Front Street.
I know Mossman.
We're buying the whole coast, guys. The whole coast, all the motels, all ours. Hey Josh, hope you're doing well. I think Josh went and had a beer at the Air Hotel yesterday. He's checked in at the Air Hotel. He's out in far north Queensland. Ben, hope you're doing well. Luke, Birchie and Jeremy, this will be lit.
Lit.
Scott, hope you're doing well, mate. The A-team. Howdy peeps. Love your content. Thanks, Josh.
Vote people.
What do we got here? We've got zombies in the White House. That would be pretty much it.
Still not as funny as Trump, though. He was so good.
He was funny. He was funny. It's all just a show.
Yeah. But he's good on television.
Hi guys, is it a good time to get solar panels now, or should we wait? Maybe in the future will we get installed for free?
Get them now. I've just had all my solar redone.
Yeah.
Down at Bemboka.
Yep.
After over 20 years had it redone. You can now get, like in batteries, you started with, it was the size of his desk. I had 20 batteries in 1999. Then when I got a few less, they replaced the batteries. In 2009 it was down to 4. Now I'm down to 2 lithium batteries that run a whole house on 240.
There we go.
You can fit it into suitcases. There's no reason not to be on solar and be selling back under the system.
Or just having it off the grid.
I'm completely off the grid, but if you're on the grid,
I wouldn't want to be attached to the grid. It's better to have completely off the grid.
It's better to be off the grid, but you want to be able to have backup because the energy prices. I mean, you're seeing what's going to happen in Europe this winter.
Exactly. Or own a coal mine, or buy in coal areas, which we're not going into locations, Jeremy, but we've been in there taking all the assets.
We don't really have a lot of coal areas.
We've got heaps of coal areas.
We've got coal areas, but not cold areas.
Coal.
Yeah.
Coal, like the black stuff, yeah.
Yes.
Here's an article. This here could be one of the most interesting things that we post up here tonight. There's 2 things that's going to be very interesting. One is about the Vatican. The second one is the Queensland tax ruling. So a lot of people keep asking me about the land tax in Queensland. I will be covering off on that tonight. But this one here, Pope Francis instructs the Vatican entities to move all funds to the Vatican Bank by September 30th. Well, that's a very interesting thing, right? I don't know why it's missing some...
Considering
It's saying to remove all the financial assets to the Institute of Works for works of religion, IOR, commonly known as the Vatican Bank. The Pope's rescript issued August 23rd clarifies the interpretation of a paragraph in the new constitution of Roman Curia.
Predicate Evangelium, propagated in March.
According to France's rescript, financial and liquid assets held in other banks other than the IOR must be moved to the Vatican Bank within 30 days of September 1, 2022. The IOR, based in Vatican City State, has 110 employees, 14,519 clients as of 2021. It looked after $5.2 billion worth of euros or client assets. Though commonly called a bank, the IOR is technically a financial institute with no branches working within the Vatican City State, provided services to. There's bits of this missing. The IOR saw a number of clients decline by 472 from 14,991 clients at the end of 2020. Nearly half of its clients in 2019 were religious orders. According to its annual report, the financial institution's $19 million net profit in 21 was also down from $44 million in 2020 and $46 million in 2019. In his August 23rd rescript, the Francis said Article 219, Paragraph 3, Predicate Evangelium, must be interpreted to mean that the activity of an asset manager and custodian of the movable patrimony of the Holy See and of the institutions connected with the Holy See is exclusive responsibility Institute for Works of Religion. The decree of force Holy See institutions, including the
Secretariat of State, is known to account in Swiss finance. Well, yeah.
To move their financial assets to the IOR by the end of September. Okay. The Secretary of State to have had accounts with Swiss financial institutions, including Credit Suisse, though which controversial London building investment was initially carried out.
Yeah.
Article 219 of Paragraph 3, the new curial constitution says the execution of the financial transaction referred to in 1 and 2 carried through the institutional works. Yeah. That, do a bit of research into it, folks, do a bit of research into that. Why would the Vatican why would the Pope tell the Vatican? Like, the Vatican's a very powerful thing, and when we get into religion, we get into certain things, it becomes a bit of a...
Banking finance, which was actually, it's funny, it was overseen by Cardinal Pell for many years because of how much money he made the Catholic Church here in Australia. So he was made head of Vatican Bank. He's made head of finance.
It's interesting.
And then he found things, this is what I've heard from very credible sources. All that stuff that he made up, that was all made up about him, that he was eventually acquitted on, was because he was finding discrepancies within and wanted to clean up the Vatican Bank.
I don't know anything about that.
No, but there's obviously the chickens are coming home to roost, and they want because of all the deals and everything they've been doing outside of the actual Vatican itself. They want to bring it in because they know that something's going to happen very soon. Yeah.
So, we've got one of the most controlling. The Vatican, like, if we talk about the levels of things, right? Let's say there's 13 levels. Would you say there'd be a few more levels than that? It goes a bit deeper.
It goes a bit, but
we think that our government's the top of the food chain, right? The government's like the third level, right?
Surely no one watching this thinks the government's the top of the food chain.
They wouldn't, but
surely
a lot of people still do believe that, Jeremy.
But no one watching Facebook
Let's
Live.
hope not. Let's hope not. They've all probably signed off and logged on to Kim Kardashian or something, right? But the thing is that you look at the Vatican would probably be up there at like 7 or 8. It'd be somewhere mid-range.
The families that control the Vatican are the most powerful families in the world.
So then you've got other groups that are up above
your
that,
Sydney family, all these...
What other families? But throw out a few names for all our conspiracy sort of people.
Volpes, because all the Black Knight families, you can just find them. So start with Orsini and work down. They're the most powerful families on the planet.
Their names are people I would never have heard of beforehand, and it's like, the Knights
from the Medicis, they're still around.
Yeah,
and they're still and they've been in control of all the financials. We're still under Roman law. Don't forget. Still, our Westminster system is 50% Roman law.
Yeah.
So that in itself tells you how powerful the system under which we're operating is in this regard.
And when you go and look at all the landmarks around the world, there's always a square. So if you can go on Google Map, whether it be, Washington DC, or whether it be Parliament House, or whether it be Canberra, you see there's a circle, and there might be a little dot, like a big fountain in the middle. There'll be a square, and it'll have like a road that goes out at about a 33-degree angle. That would be
well,
that.
The Masonic lodges is enormous, but we know so little about it. It's kept. Basically, the entrance for the Illuminati is like 48 degree. Anyone who says that they're less than that, they're completely unaware of what's above them.
So when you look at places like the Vatican, right? My point of this article is I don't care what's in it too much, but the fact that the Pope has been given an order to put down that all their assets are to be taken in to a specific institution by the 30th of September, that to me gives an alarm bell going, fuck, there's a big problem coming up. There's an iceberg. We better divert the iceberg as much as we can and not crash and lose all our assets. So when we look at the zombie companies out there, we're looking at what's happening with monetary policy. Something is about to implode.
Price of gas too, because the excise finishes in Australia. It finishes at the end of this month, and OPEC's cut production by 100,000 barrels a day. So we are going to see a huge increase in that. And don't forget, which is when no one knows when, I reckon before the end of the year, the death of the Queen of England. Huge impact financially. We don't know how it's going to affect us because no one's been through
People still
like
think
this
the
before.
Queen is like a whole
They're
figure,
symbolic. The symbolism is very.
When you
very
realise
powerful.
that the type of bloodlines are different than what we have, and everyone's got a different sort of bloodline out there.
Zombie bloodline.
Something like that, Jeremy. Something like that. People will get deeply upset when we talk about Her Majesty like that, Jeremy. So
I hate them. I hate monarchists, but I love the monarchy. Don't get me wrong.
I love the system that we've got because we can play in it. News.com won't survive. Sydney businesses struggle as workers turn their backs on the CBD. I was talking to a mate the other day, and he's probably watching this, and he knows who he is. Because when I was talking to him, I said to him, mate, just go and Google this, right? And we're seeing every week there's like 5 or 10 building companies that go broke in Australia. I said, just type in building company, builder, administration, UK, builder, administration, US, building, bankrupt, New Zealand, building, liquidation, Canada, right? Builder, bankrupt, Kenya, right? I said type in fucking Kenya, right? Building, bankrupt. He typed them all in, and he's like, mate, and he reads out the first thing, and I said type in news as well. And there's all these news articles. Doesn't matter which country you're in around the world, you type in the news, it's the same shit, right? It's like they've gone, let's take off Sydney. It's a global news that's going out there, right? The same things are happening out there around the world. Interest rates are rising everywhere. Companies are going broke. Stock markets are crashing. Commodities are going up. Supply chain issues. Yeah. It's all around the world, and people aren't sort of. I saw a comment there. Gemma, your comment's funny, but maybe remove just remove that comment, Gemma. The one I know, the one with the numbers you put there. Take that one down. But we're seeing the same. We're seeing the same things globally around the world. So we're seeing here, they won't survive. The Sydney businesses struggle as workers return their backs on the CBD. So let's go into this article here. Before the illness that turned the world upside down, this guy, Marino, bustling city CBD cafe would be booked out on Fridays. But now the city is so quiet, he had no choice but to reduce staff numbers by the end of the week. And like countless other small businesses in a city, it's a struggle just to break even. So he's got rise of goods. He's got rise of interest rate on his house. He's got rise of interest rate on his car that he doesn't own. He's got staffing that aren't coming in. He needs to pay more for staff. Why aren't his staff coming in? Because they didn't want to go and get, right, with the little thingy. Yeah, jabberoonie, right? So
go to the jabbertoire.
Exactly. So he is struggling to break even, which is bad, right? But this is one article, right? It says, heartbreaking. Sydney boss blames society. I remember when the news used to like having me on every week, right? I remember when I used to be on the news. I would be placed there as a puppet going, oh, talk about negative gearing. And it's like, negative gearing sucks. And they cut the articles because they're like, we can't publish that, right? Like, they can't publish
It was
that.
more interesting in the ad break. If only you'd...
Exactly. If people could see the ad breaks or what they
What
would
you're
talk
talking
about,
about.
they'd be like, what's really happening out there, Nathan? What's really going on in the news, right?
Well, we can't talk about
we can't talk about it on, right?
2, 3, 1, go.
But, you know, when you look at it, but no one ever put out there, if I went on the news and said, hey, it's the central banks manipulating currency out there, it's the controlling powers to be that have put this in, imagine that, they'd be like, cut this guy, let's go and fight it. You know,
They
Nathan.
pick up everything they can.
Exactly, right? I remember talking about stuff, as I was talking about, it's like, oh, let's put out some articles about Nathan, his financial issues, or whatever the case may be.
Whatever it is, anything that they can possibly find.
So, exactly. So it goes on to, so they're saying it's society's the issue, right? It's climate change is the issue. Not that they've screwed it up because of what they've done as their policy. Anyway, here's another guy. He goes, Hungry Bean Cafe on Clara Street. Workers were shunning the office on Mondays and Fridays post-illness, and that the trend, coupled with months of bad weather and ongoing public transport strikes, has devastated small businesses. So it's not Putin today, it's nothing else, it's because we've had bad weather. You're telling me there's sometime in the last fucking 40 years or 50 years that we haven't seen bad weather occur, right? Does that mean why your business goes bankrupt because of bad weather?
Why would you open a cafe on Clarence Street? It's most of the time you can't have it open.
Well, ongoing
No
public
one's there.
transport strikes has devastated them. We have a large cafe with 140 chairs that have been here for many, many, many years. Before the world sneezed, we would be booked out by Wednesday, and most cafes and restaurants anywhere in the CBD would have extra staff called in on Fridays because it was the best day of the week. Now it's exact opposite. It is the worst day, followed by Monday. People need 5 days a week of earnings, not 3. If it's 3 days, how do you manage a profit? The most businesses are doing is just paying the bills and keeping their heads above water. I do not believe that there are many that are killing it every week. He said the impact was so severe that many businesses had already collapsed. On the street alone, there are 6 or 7 cafes that are never coming back. A lot of business owners are sick of paying rent when out of 100 workers on one office floor, only 5 of them turn up on a Friday. Others are stuck. They can't make more money even if they wanted to once things get busier because they can't hire more staff. There aren't enough workers. There's still the same amount of people that existed here, right? There is still 25 million people that needed to eat, shit, put a roof over their head, any of that stuff. Why is it so different in 2022 than what it was in 2019? Right? What is so different? They were thrown out of their jobs. Why are people not going to the city? They just go, well, I don't want to afford paying all the traffic, the tolls, the parking, and everything like
They
that.
don't want to do that, and they can work from, and because
They
they're
can work
working
from
from
home.
home, they haven't had to come back into the
Correct.
city to start with. And in the last 2 weeks, coffee's gone up. I'm paying $5.60 for a cup of coffee.
$5.60, wow.
Well, yeah, it is wow.
I've never had a coffee before. I don't drink coffee. I don't know.
Yeah, no, it's gone up. It's gone up considerably, and they've had a huge impact goes globally. We're not even seeing the start of it yet because of the coffee plantations and stuff that have been, and all these floods that happened, Pakistan and everywhere,
Yeah.
is going to affect all the supply chain, all the way down the line. And people don't need to work because they can get their compo. You're paid not to work.
Yeah.
You're making some, why are you going to put in? There's no
Yeah.
incentive. There's plenty of jobs out there.
Yeah.
But the government's made it so
Easy for people to.
They want you to be dependent on them.
Yeah.
They absolutely want. They want it. They'd love to have a flat rate.
Others, where is it?
Others are stuck.
They're stuck. No, he said more eateries were only opening a limited capacity. They no longer had the staff service a full venue, and most workers were taking on additional duties as a result of staff shortages. Businesses are facing financial ruin. The situation is not a new one, with an independent MP, Sydney, Alex Greenwich, writing former Prime Minister for Small Business, back in July, plead for urgent assistance to protect small businesses. Greenwich, who previously raised the same concerns to the Treasurer in January. Businesses battered by significant reduced numbers of workers. Number CBD business operators have contacted me about significant financial hardship. They tell me that they signed commercial leases when the business, blah, blah.
If you try paying rent in the CBD or in Surrey Hills, you're looking at what? Minimum $600 a week. How are you going to spend
Exactly.
make that rent working in a cafe?
Exactly. Goes on to read, this is from the minister guy, small business operators who have contacted me saying that landlords have only agreed small rent reductions for very short periods, leaving them pay full rent despite significant loss of business. They have accumulated significant debt, a risk of business failure and bankruptcy. Commercial hardship grants, government fee rebates, expand outdoor dining space and dine and discover vouchers did not prevent escalating debt for CBD small business owners, and I again urge you to extend government help to protect business owners for full ruin until pandemic conditions are well and truly over. Businesses will not survive. In the situation, Business Sydney executive Paul, someone is all too familiar with, explaining to news.com, it was a sad sight walking through Sydney CBD on Mondays and Fridays post the thing that happened. Tuesday, Wednesday and Thursdays are manic, but you don't see a lot of people on Mondays and Fridays, he said. It's rather sad. To be honest, a lot of small, medium-sized business owners are quite depressed about it all because they rely on people coming to the city Monday and Friday and they're just not open Saturday and Sundays. Cafes, restaurants, hairdressers, dry cleaners, shoe repairs, newsagents, chemists, you name it, they're all struggling. So when you stack all these articles on top of each other, right, you've got interest rate rises, right? This guy has left his cafe, he goes home of a night, hops in his car, his petrol's too fucking high. He goes home with his interest rates on his house, now it's gone up even higher, right? These are the problems that are coming through on the households. One of two things has to happen. You've got to make everything cheaper, which you can't make it cheaper without doing a depression, right? Which they've tried to avoid the depression. We're either going to have a depression or we're going to have the biggest inflationary cycle you've ever seen, which will still lead to a hyperinflationary depression. It's a lesser of it's a better pill for the system to stay alive. So when you start adding these things up, how long are interest rates really going to stay up for? How long can they stay up for? How long can fuel stay up for? How long can certain things happen for? Inflation's occurring everywhere. By putting up interest rates, all it's doing is creating even more inflation by making the cost of everything go up even higher.
The government can't sustain it themselves anyway. They're going to go bankrupt.
Exactly. And the funny thing is imagine when all this debt rolls over that the government's taken on the last 2 years, we've got trillions of dollars worth of debt. Anyway, this one here, Jeremy, no comments. I'm going to talk on this one.
Okay.
This one here is from CNN. Bank of America to offer zero down payments mortgages in certain Black and Hispanic communities. So, Jeremy always likes to say things, right?
We don't have Black and Spanish.
Okay,
yet.
but I just, not yet, right? They might come here for refuge one day because the US goes under, right?
Yeah, no, they will be welcome here. I'd love that.
It's like the US is a third world country.
Music.
Bank of America is offering zero down payment mortgages with no closing costs for first-time home buyers. First-time home buyers, they get free. It doesn't cost you no deposit. It's like, you just walk in, oh, yeah, I want a house. Okay, here, which one do you want to have? You can have one of these. It's like watching Mr. Beast videos, and he goes, you can have a car for $1. Have you seen Mr. Beast?
No, I haven't seen
Mr. Beast, he's the number one guy on the internet, right? He's like,
Really?
he does lots of charitable things, right? He buys like a car yard out with like 50 cars and he sells them for $1 to people. He tries to sell them because they're like, oh, what's the catch for $1? And he's like, take the car, it's $1, right? He gives them away for $1. It's literally like that. You come in and you go, which house do you want to choose? And you get it for free, right? That's what they're doing.
Love that.
So if we're now starting to see, for them to try and stimulate the economy somehow, that they are offering zero down payments. Imagine these people not being able to afford to pay. Why could they not save a deposit of even 2%? No deposit, no stamp duty, no closing costs. You get you think you get a first home in a grant here? You're getting everything given to you. You're getting the house given to you.
Where are they? And then Charlotte, Dallas, Detroit, Los Angeles, and
Miami.
Well, yeah, but in Los Angeles, they've got a homeless population outside the roof. You know?
Yeah, but I don't know. I've never been to America. It doesn't matter, right? It's that it's a principle that this is your mainstream media here, CNN, Communist News Network, and then we've got here that they're giving away.
So how would the banks? So Nathan, how would the Bank of America benefit from doing this?
Because
What are the benefits
they're
to them?
originating loans. They're probably getting grants from the government to allow that to happen.
Okay.
So there's all different types of rebates. So let's go on and read it. Because what you start seeing is that when something starts in one part of the world, just as we're saying, you could literally type in the news in 2016, Sydney house price unaffordable, Melbourne house price unaffordable, Auckland house price unaffordable, UK house price unaffordable, fucking Canada house price, Philippine house price unaffordable. It was all the same news. Then you type in, And it's great.
Filipino house prices.
Is that affordable?
What in Manila?
Yeah,
You
I don't
can't
know.
afford to buy. But,
Yeah,
but
but
aren't
it
we
was
gonna do the
unaffordable.
same? But aren't we going to doing the same here? Where the government's now going to go in and buy with you your property?
Correct, right?
So, you
Correct,
know,
right? So we're now seeing these things that are occurring, right?
Public-private
The
partnerships.
correct,
In your
right?
home, and guess who gets the rough end of the asset pineapple on that one? Should things go belly
The
up?
poor peasant that has to be attached to that facility, right?
Oh, you've
When I say
lost your
peasant, I
house.
mean that to everyone, me, you,
all
everyone,
of us.
or anyone that's signing a contract, right? So let's go on and read this. The Bank of America is offering zero down mortgage payments with no closing costs of first home buyers of certain neighbourhoods in a new program designed to chip away at inequality in the housing market. What sort of thing is inequality by them highlighting and making the divide, right? Anyway, this is a different story. The new loan launched this week requires no minimum credit score. No credit score. You don't even need a credit score. You just need a heartbeat, right? There's probably not enough people with heartbeats
How do
left
you-
anymore, right? But
Put it
it's
in your dog's name.
put in the dog's name. There was things called ninja loans back in the day. There were no income, no job, right? Loans. That's what caused it.
That
Ninja
was
loans.
the Social Network, wasn't it? No, which
No,
one
that was
that?
Ninja Loans was the Big Short.
The Big
When they
Short.
were-
That's what I meant. The Big
yeah.
Short.
So no credit score, no mortgage insurance, which typically lenders charge when borrowers put less than 20% down. So do you notice that in America, you put down less than 20%, you need to put mortgage insurance, same as Australia. Same things are all around the world. It's open banking now. Instead of a traditional credit score, first home buyers will be evaluated based on their history of making timely payments for rent, utilities, phone service, and auto insurance. Right? So if you pay your phone bill on time, get yourself into $1 million mortgage. No money down. No money down.
It can be harder
Bank
to
of Am-
find than you could think, though.
Bank of America said the new mortgage known as a community affordable loan solution, which I'm highlighting here because it's all in capitals. So that must be the name of the grant that they're creating. Community affordable loan solution is CALS. I was just trying to read out what it was. CALS is available in certain census designated markets, including Black and Hispanic neighborhoods in Charlotte, Dallas, Detroit, Los Angeles, Miami. I don't know any of those places.
Yeah, no, Compton,
I don't know.
all
what
those areas in Los Angeles.
all I know is Dr. Dre and fucking Ice Cube.
That's
they're
what-
good.
Yeah, they are.
great.
They're great.
I
But they're all
love 'em.
from Compton.
That's all I play. Yeah, straight out of Compton.
Straight out of Compton.
I can rap all those songs off the back of my head. Anyway, the bank said borrowers do not need to be black or Hispanic to qualify. Eligibility is based on borrower income and home location. So they're saying it's a certain black and Hispanic communities, but you do not need to be black or Hispanic to qualify. Well, it's good that they're being diverse, right?
Yes.
Now we could go in there and get a loan in Compton.
I'd go and live in Watson, Inglewood, and those places.
Home ownership strengthens our communities and can help individuals and family build wealth over time. AJ Barkley, head of neighborhood, blah, blah. Bank of America said in a statement, our community affordable loan solution. So it's Bank of America that's doing it as a product, right?
Yes.
Will help make the dream. But when you think of Bank of America, right, Bank of America's taken in these loans. If they go to a real shit area and they have to try and push up the rates of that, when they're taking over the security, those securities are going up in value because they're creating a market out of nothing. So the bank could actually be creating its own product here from nothing because they're creating a loan product on top of a house that no one wants to go and buy the house. But if they start pushing the prices up, then the rest of the market gets dragged up with them.
With it, yes.
Yeah. A Bank of America spokesperson told CNN that the bank will consider how to expand the program to other cities after an initial assessment. The move, which one of the nation leader lenders comes at a time when skyrocketing home prices threaten to deepen the alarming divide between white and black home ownership. Anyway.
But they're mostly, because the homeless in America is absolutely through the roof, like Portland, Chicago, San Francisco, Los Angeles. It's like people are living in their cars in tent cities all over that place now. They can't afford it.
Yeah.
And also they do not, it's like here, they do not want to decentralize
Yeah.
populations to leave the cities. And this is one of the ways they then get them back in because they've already got the inbuilt infrastructure
Yeah.
already in place.
And then on the opposite side of that, we have here in Queensland, this is what everybody's probably wanting to listen to at the moment. A lot of people are asking me, Nathan, what do you think about the Queensland government increasing land tax, right? So they've come out and they've said land tax, if you own a property in Queensland, let's say you've got a property in Queensland, I think your land tax under your personal name is 600,000 threshold.
Yeah.
You don't have to pay land tax.
Yeah.
If it's in a trust, it's 350,000. So they've come out now and said if you own like $10 million worth of property in Sydney, well then that now gets added to your Queensland land tax, right? And everyone's sitting there shitting bricks saying, well, that means that if I own a house in Sydney and I own one in Queensland, I'm going to have to pay land tax for a Sydney property. And I just wanted to break that down because everyone's very concerned about it. These things need to get passed, which this has, but then it also needs to be, put in and controlled. If we remember back, what was that guy, Bob Carr? Bob Carr put a tax in from a premier. He put this thing here. I'm just going back to this last article, right? With these no income, no job, no credit score, no nothing, right? That reminds me of The Big Short, right? They're literally clutching at straws, trying to keep the Ponzi scheme alive. They'll just strap
doing it again, knowing that everyone's forgotten about it. The first time, we'll do it again.
That's what they're doing. They'll just continue doing this over and over until the bubble keeps getting bigger and bigger, and they've consumed everyone's souls, basically. But anyway, I digress. So in Queensland, they're talking about the land tax at the moment, right? If you own land in New South Wales, in Melbourne, in Perth, whatever, you have to now go to the Queensland government and declare, hey, I have property in another state, this is what it's worth, now can you please charge me more land tax, right? As far as I'm concerned, if someone's going to come in my fucking house and try and rob from me, I'm not going to go and give them the fucking tour of where they can go and collect everything from. They're going to try and do it, get fucked and try and find it themselves. So that's the first thing. Second thing is, love how I just have some comedy around this. Most people would be there going, oh, well, apparently the tax law. That's the reality of it, right? But I read today on the Queensland website. I just want to go into it and just run through and read it into its entirety because it's not as bad as what most people are thinking. From the 30th of June 2023, when we calculate land tax, we will use the total value of your Australian land. This includes your taxable land in Queensland and your relevant interstate land. Relevant interstate land includes land located in another state or territory which is valued under interstate valuation legislation and is not excluded to interstate land. The total value of your Australian land will use to determine whether the tax-free threshold has been exceeded, the rate of land tax that has been applied to the Queensland proportion of value of your land holdings. The current tax-free thresholds are $600,000 for individuals other than absentees and $350,000 for companies, trustees and absentees. You'll only pay land tax on your own in Queensland. Okay. Example, we are not taxing your land outside of Queensland. So what they are doing is that they're saying if you have $2 million worth of property in Sydney, then that $2 million gets slapped in, so the $600,000 threshold, your land in Queensland starts at $1.4 million, and they charge you the land tax of that. So what they're doing is trying to increase your land tax on that. The instant thing that clicks in my mind is that if you have property under a trust, you can have up to $350,000. So I would be putting, if I was buying more stuff in Queensland or whatever, I'd be putting it into Queensland into certain size trusts, which would not exceed the $350,000 land value holding, so you're not getting screwed from that perspective.
Is it $350,000 per property though, or a total?
Per trust value in total in the trust, and $600,000 into the thing. So if you have in individual. So if you have a trust, if it was me still buying and I'm buying every week, right? Last week settled 2 motels, this month settling 4 more motels. If I was, sitting there getting that, I would be sitting there going, hang on a second, I'll just set up a new trust to put it under, right? Because it's going to save me on the land tax component. It all comes with, upside and downside. I see so many people, Jeremy, and you've seen this over all the years. People will come to us and they go, I must have a house. I want a house on land. The land is the important thing, right? The property gives you the cash flow. The land doesn't give you the cash flow. They all go up with inflation. Your 1,000 square metre block of land has gone up the same amount as 5 units have, right?
And you're paying tax on that land that you're not even using.
You're not getting cash flow from it. You're paying tax on that land. I'd rather have a building that's bringing me in cash flow, because the cash flow is what's important to keep expanding the asset base. So if you're buying a unit in a block of, say, 20 properties, let's find a piece of paper here. I just say that we buy one house, and the land, people always ask me, give me a better one, I just wrecked this. So people say Torrens title's better, right? So they go buy a block of land, 1,000 square meters, and the land value's worth $1 million, right? And they go, I'm so cool. The land value is going to go from $1 million up to $2 million, right? Well, suddenly you're paying land tax. You might be getting, say, I don't know, $500 a week, right? $500 per week. Congratulations, you're getting a below substandard yield. Or for that same $1 million, you can go and buy a unit, just one unit, in a block of 20 units here. Let's say there's 20 units there, just for the fun of it, right? And that land value is only worth $50,000, but you're getting $50K for the land value, and you're getting $300 per week, and that's only $200,000. So whilst you've got all these people that are going out buying a block of land that's a quarter of an acre, getting $500 a week with $1 million land value, paying land tax on that shit, you go buy one unit, people go, oh, I don't want to go and pay for strata fees, oh, blah, blah, right? Well, when you buy a house, you have to pay land tax, you have to go and pay for building insurance, you're going to have to pay for the driveway that fucks up and pay for the gutters when they fall off.
Yeah.
You pay for everything. When you're buying a unit, your strata covers all that shit. So 50 grand, that means you could have 12 units without paying land tax at your 600,000. So if you had 5 units for 200 grand a piece, they ran out for $300 a week, you're getting $1,500 anyway, or you got your $500 a week on your $1 million block of land. What's going to go up more? The 200 grand doubles to 400 grand, very easy to do, or the million turn into $2 million, which, you know, is all up to hope and a prayer.
And then other people say with this one, they go, yeah, but I want the opportunity, says I can subdivide and build another and sell off the land on the $1,000. So how much are you going to be spending in council rates before it even gets approved? It takes 2 years.
People don't even realise, right? So here's something. Here's the funniest part about it, right?
50,000.
I'm over a centie millionaire, right? So I'm over, what is it? 8 figures, over 8 figures, 9 figures. I'm over 9 figures, right? I've got 9 figures in a portfolio, 150, $200 million worth of assets. How many times have you seen me come to you, Jeremy, and say, hey, Jeremy, I've just subdivided a property. I've bought a great development site and developed it.
I've just given the council $75,000. It's going to be approved in 6 months.
Get out of here.
Wait.
Get out of here, right?
I'm building a granny flat.
I'm building a granny flat. How many times have you heard me say, I've got a fucking granny flat, Jeremy? Huh? Never. I see Andrea in here. Andrea from Blink. She just, she'll know. How many granny flats do I own? None. I've got one that's an old shitty one that's been vacant for years. I don't buy granny flats. I don't subdivide. I buy assets that generate cash flow. I want the cash flow. All these people out there going, oh, I must buy it. I'm going to subdivide and potentially do this. I'm the laziest motherfucker. I'm the hardest work you'll ever find, but I'm the laziest motherfucker because I identify risk, and having too much risk in one thing, I just want to accumulate assets by going, oh, I'm going to buy a block of land, I'm going to subdivide, I'm going to build on it. Like I have, and don't get me wrong, I've got 200,000 square metres of land in the Hills District in Sydney. I own an acre in the CBD of the Gold Coast. I own, just on Cavill Avenue, a mad development site. I could build a 40-storey tower if I want.
You should.
I just could be fucked, right? I could be fucked, right? I could be. I'll sell it one day and make some good coin on it. But the reality,
a hotel, sell it to Crown. They're always looking for something new.
I don't know. Just whatever, right? I'll find some joker that's going to buy it, and they'll get stuck with the bag, right? But I bought them as cheap residential properties. I don't look at them as a development site. I'm not out there developing. I'm collecting the assets. So all these people wanting to buy high land content, this is the time you're going to get screwed. I've talked about a very simple strategy over the last 13 years, 14 years of my public life. I've talked about buying assets that are below market value, upside for capital growth and strong cash flow without adding any of the new elements to it, right? The reality of it is it's very simple. It's not sexy, not flash, but the fundamentals are very strong. You need the cash flow to stack up. I don't trust the government, right? I can see people here saying fuck the government and all this sort of stuff. I don't trust them. I want the cash flow. That's what's important. I'm not speculating on certain things. So,
and especially if you're investing and you are working, you need that cash flow in order to boost income and for servicing. Because
exactly.
As these rents, this is what we're finding is that there's no shortage of people with tons of equity in their properties. They've got it's the servicing. You've got people with 200 to 250. They've got to be able to service for that 250 to take it out. Or sometimes they can only take a little bit. But the point is, you know, you've got to be able to service and be able to be cash flow and have that cash flow in order to do it.
Let's have a look at another scenario here, right? We have the two. I'm just drawing these up and doodling them on the back of our notes here from the news. So I've got the $1 million land with a house on it, right? Rents for, I don't know, let's be really generous and go, it's $800 a week per week, right? $1 million at $800 a week. So I'm going to go, oh, I'm so fucking happy I've got that, right?
Yeah,
Well, I've got the $1 million times 5 shit units, right?
Boxes.
200k a pop, rent for $300 per week. That means you're getting $1,500 per week. So let's just get this scenario right. You've got your $1 million house over here, $800 a week. Oh, well, I've got a block of land, so great, good on you. Go fucking sit on and pay your taxes. You've got over here $1 million with 5 shitty units. They rent for they're $200,000 a piece. They rent for $300 a week. You're now getting $1,500 a week. To me, I'm a very simple bloke. That's $700 a week in extra cash flow. You've got to pay strata fees. Well, if you're not paying strata fees, now you're paying for land tax. But anyway, let's assume that we go through a market that we've just seen, Jeremy, and rents are rising. Oh, the house, it's a much better thing. So you'd have to see that you get $100 per week extra. Okay, your $100 a week extra rent has gone up to $900 a week. Oh, what happens to the units? Oh, well, those little shitty units, they've only gone up $50 per week. $50 a week times 5, that's $1,750 now. So with having a portfolio, right, you had your $800, it's gone to $900 over here, where you've got $100, you can't even keep up with inflation, go fill your car up with petrol. Or you've got the 5 units that have got $50 a week each, times 5 is $250 a week, now you get $750. So that gap now is $850 per week better off. Those things are now going up. They're talking about, oh, the house prices are falling. No one's looking at the affordable dwellings, which are going up because you can't build them. You can't build them for what they were. The builders are going broke. No one can afford. Someone just wrote here, to build a granny flat costs $200,000. It's better to buy a whole new asset. Exactly. You can't build the asset for the price of buying them. So if you're buying a portfolio of stuff...
Hey, Henry.
All right? Just think about that. Take a screenshot. Go and show it to your mates. Think about this next time you're buying a house. Would you buy $1 million house, or would you buy 5 shitbox units? They could be brand new units, right? I did a unit today, without telling people what they are, Jeremy. 215 grand. Some idiot paid 350,000 for it, like 7 or 8 years ago. Rents for $350 a week. Growth corridor. It's brand new. It's
Like in the last what, 18 months, 2 years.
What's that?
Wait, is that how old is that? I don't know.
I was like 5 years old, 7 years old, whatever it is. Yeah. So some poor bastard paid too much. It's got depreciation. Doesn't need any work. You can't build it for that price. Can't put a granny flat for that price. The land content. Who cares about that? I want to own the asset that's being inflated. Everyone goes, land goes up and properties come down. I don't care if it's a motel. I don't care if it's a fucking shed. I don't care
anything
if it's
that's built now. Anything that's already built is automatically more valuable.
So much valuable
Than anything that you're looking at an empty block going, I'm going to build on this. When
I feel
and
sorry
how
for people
and
that
how
do that. I feel sorry for people that do that, Jeremy. I feel sorry. They're wasting years of their life. They sell the asset. They end up with no asset. They've got money. People go and buy a property. They build it. They speculate on it. They sell it. They swap their energy, their effort for cash. Then that cash doesn't buy them anything. The cash buys them less shit than what it did 2 years ago. So, anyway, Jeremy,
unless you can build yourself and your own sparky, your own carpenter, your own bricky.
Yeah, but all the parts have gone up.
So long as you've got your own forest and you can have got your own mill, you know.
Well, then the mill's got up in value.
I know. I bought a mill. So,
did you?
Yeah, I bought a mill.
There we go.
Portable one.
Wow,
But
like a trailer one.
No, one you use the chainsaw, because you use those. There's Milwaukee chainsaws. You can actually do all your planks and beams and stuff. It's the emergency system.
This guy's set up. This guy's set up, everyone. This guy's set up.
You've got to set up.
So
plant your own food.
Jeremy, we were told, I always get told to spend an hour on you, right?
Where are we now?
We're an hour and 10 already, and we haven't even got through the news, right? And I've got here from 7:20 to 8 o'clock to talk to you about some stuff, Jeremy. We've just gone through
we're going to talk about equity.
So we're going to talk about equity, Jeremy. Okay. You look after hundreds of people,
Yeah, lots
yeah,
and lots
of
I love my clients.
that you've over the years have spoken to so many people that you've helped out.
Yeah.
What is
What you
equity?
do. Equity is is the accumulated growth of their asset that they have purchased.
Yeah.
Whether it has happened immediately or it's happened over a space of time, it is the value of their asset that they have purchased.
And how can you release equity?
You can release equity. Oh, they're putting me on the spot here, Nathan. You can release equity by going to the bank and saying, "Give it to me," and putting it in an offset account, provided, of course, you're still serviceable to do it. You know,
And
that's what you got to do, and you need that equity to be able to use as a deposit to go and buy some more properties and build your asset base and your cash flow.
have you ever had someone come to you with like $5,000, right? Like we laugh about these articles. We laugh about these articles that say
We've got-
you can get into a property for no dollars, right? This is like what we were talking about 10 minutes ago for people just checking it now. You can get into a property for no money. Have you ever had anyone come to you and say, "I've only got like, I don't know, $5,000, $10,000, get me into some properties," and you end up getting like a half dozen properties?
I haven't had anyone come to me with 10 grand and get half.
No, but
dozen.
the equity they have. Do it
What,
all the
in-
time.
in
Yeah,
the-
no, they have cash. They don't have cash. So someone might be watching here going, "I want to build a property."
Oh yeah, but
portfolio."
people, if there's always something you can do. If you've got equity, there's always something you can
Exactly.
do with it to put you in a better position than where you were before.
So
There's
someone
no
might be
question.
watching you tonight thinking, "Okay, I've got
I've only got
$5,000.
10 grand.
I've got 10 grand,
yeah.
$5,000. Because people don't have cash. They don't have, "Oh, I've got $1 million sitting in my bank account."
Yeah.
But how do these people that are wealthy get ahead? How do they get ahead?
Because they have it in a performing asset. Whatever you've got it in, it's got to be performing. So long as you don't have it just sitting there in the bank. Question that a lot of people ask though is like, all right, so I've got it sitting in the offset, and it's on XX. As soon as I spend it, I'll be paying mortgages. I'll be paying interest rates on both that and the actually what I'm.
What would you normally say? I've got an answer for that. But what would you say?
I say you can use some of it to pay down your debt anyway. This is why you're taking equity out as well. It's not just depositing more, but you can also be paying down on what you've already got existing.
Well, let's say that someone's paying 4% interest rate. They might be paying 4.5% now. I don't know what people are paying. I don't even look at my interest.
5%, 4 to 5%.
Okay, let's say
now.
5% interest rate.
Yeah.
So if someone pulls their interest out, their money off their
The offset.
out of the offset,
Yeah.
and then so they pull out their, let's say they've got 100 grand equity, they go and use it as a deposit on a property, they're now paying 5% interest on that. As long as you're getting more than 5% return,
On it, because they'll be looking at, so long as you're looking at 8-10% average.
10% yield,
Yeah.
8% yield, 15% yield, 20%
You're
yield,
in a good.
in a good position. So maybe a few, like Charlie was on here the other day, and everybody liked Charlie. He's just like sitting here.
He's a
and-
great guy.
Yeah.
Everyone I work with, everyone on this floor,
Yeah.
from Wayne, Gemma, Pat, Amber, Hannah, everybody is just,
Yeah.
they're just all top people. Charlie,
But-
all of them.
Charlie talked about some examples, right? And these examples of some of the deals. He had someone that had no job that got 5 properties in a 2-month period. He had someone that got 7 properties in like 3 months. What are some stories like around equity, just to share with people like what's possible out there using equity, right? It's literally infinite return. Most people will go out there and work and sell their soul in their job, going to the CBD in Sydney, hopping on the dirty train, leaving home at 7 in the morning, getting home at 7 at night, sacrificing their kids' time when they're young, whatever, and they get 100 grand a year, 50 grand a year, whatever they're getting. People can't get ahead using that. How do your clients get 20 properties? What are some of your clients?
Look, I think the best ones is because no one's got a crystal ball. There's like, remember when we bought into up in the entrance and up in Long Jetty years
Yeah.
and years ago, okay?
Yeah.
And for some reason, Long Jetty went through the
Straight through
roof, within moments of them buying, and they're able to pull out
Yeah.
100 grand. Whereas people go, interest, this hasn't gone up.
Yeah.
If they waited another 8 months, that too was going to go through the roof. We have no prediction about when it's going to happen. We've got a fairly good idea at the time you buy, based on what we're seeing now, what you can pull out. But if you've got that asset, be able to pull out anything from it, you're always going to be in a better position. no
Yeah.
matter what. Because there's always something you do, even with 10, 20, 30,000.
Yeah.
You know, if you in the space of a year, you're going to have 4 or 5 properties if you're vigilant.
As we started the live stream tonight, we're talking about one of your investors without mentioning their names, and they bought 2 properties, and we're talking about equity. I said, I actually just sent him a property, right?
Yeah.
And he was like, he settled the 2 properties, when, like 3 months ago?
Yeah.
Probably 3 months ago.
3 months ago.
And I said the week after settlement, let's go and hit up equity, right? And he went to hit up equity, and one of the properties I expected to see $70,000 in. It didn't happen. We need to go and take it to a different bank now, and I'm confident we'll still see it. But this is 3 months, right? And you can't perform miracles, walk on water, and all that sort of stuff. The property that he thought was the shitter property, which was like 150 grand property, put in like 30 grand deposit, he's looking at pulling out 40k or something.
Yeah, he's running, and that was within 3 months.
So
and he didn't expect the one that he didn't expect, or we actually weren't expecting that much.
I was telling
him
not to worry about that one.
We'll get it from the other one.
We'll get it from the other one.
Yeah.
So this guy came in with like 80 grand. He's got 2 properties. Now he's going to be able to pull out equity, get his 3rd one, and I know that the other one with the 80 grand equity will be able to get that
another
out.
bank.
We'll go to a different bank. We'll get it number 4. So that'll be 4 properties
by
in
the
like
end of the year.
Yeah, in 6 months, let's say.
Yeah.
What's the largest portfolios that you've seen, Jeremy?
Well, look, without going into any names, I'd say the largest portfolio I've seen.
Just on average sizes, yeah.
The average size is between 7 to 10, double digit. We always have celebrations when they get into
one
double
of your
digits.
clients yesterday, and I saw she.
Yes.
Right, she. I'll just write you.
I know
name
who I know who it is.
Yeah. That one.
Yeah.
So she texted me. I said congratulations, and I sent her another property, and she took 2 more, or she took 1. And she's on her 11th property. And I was like, that's cool, right? It's like
but in a few years, and it's not an extraordinary income either.
What sort of income would your client? Let's say someone's on 10 properties. What would the income normally be?
They're between I'd say between 80 and 110 maximum a year.
80 to 110k, right? So
yeah.
if you're watching this and you're thinking, I can't afford to buy a property portfolio, whatever. 80 to 110k
is going to can get you.
And how much would they start off with? How much would they start off with when they come to see you?
They've got about 30. They've got 30 in equity, or 30 in cash. I've saved
30
up
in cash.
30 grand.
How much equity? 50k in equity or something like.
They've got, haven't got and they haven't got anything in terms of like properties. They've started with nothing. They've got about 30. They've got about 30 grand that they've managed to save.
So
and we're looking at about three years to get to this 11 properties.
10 properties in 3. Let's just say 10 in 3 years. 10 properties, 3 years, and 10 properties, 3 years. Starting off with 30k, 50k, 80k, whatever. If you're on 80k to 110k, let's say you're on 110k, you lose 30,000 of it going to the commies at the ATO, so you're really left with 80k, pay out your exorbitant fees to live in the world of inflation. You might be able to save up 30, 40k a year. Let's say you saved up 50k a year for 3 years, right? Let's say someone was fucking stapling their socks together and living on Jats and stuff. Even Jats would probably be too expensive now, but anyway. Let's say they say 50 grand a year, right? That's 150k starting with their 30k or 50k to start off with. That's not like a stupid amount of money, right? The only way, if you're looking at buying 10 properties, you need 50 grand a property, it's $500,000. People will be going, I can't afford $500,000, so I could never save $500,000. How do they do it with the equity, Jeremy?
They were vigilant.
Vigilant?
Yeah.
How so?
Well, as soon as they were able to get that equity out, they went ahead and did it. The most important thing that any client can do really is to be proactive with their portfolio, meaning that they keep their eye on it. They make sure that the rents are getting paid. The rents keep going up, and they also make sure that as soon as they've get the valuation, they start the process of extracting the equity and putting it into good use and not sitting on it.
Yeah.
The worst word that you can use is no. It is seriously. The most successful clients are the ones who will say yes to everything. Even if a property falls down for whatever reason.
Have you ever had one fall down? We've never had anything fall down.
No, but I mean...
Do you remember we bought a property, right? You know the one, right? You know this one, right? I'm going to write it down here.
Yeah.
Yeah?
Yeah, yes.
Yeah. We bought a property in the Hunter Valley, right? It was like $80,000.
Yeah.
It was less than land value,
Yeah.
right? It was less than land value. This guy didn't rent it out because he's like, oh,
It'll never rent. He never
it'll
did
rent.
anything.
He
He
did
was going to
nothing
do
to it.
work
He was going
himself.
to do the work himself, never did anything. He left it vacant for 2 years. And one day we'll talk to him like, man, see if he just rent it out. He's renting it for like 350, 400 bucks a week. He paid 80 grand.
I think they just, all he did was fix was the porch, because the demand for rental properties is
Sure.
through the roof.
Yeah.
I mean,
We've never had a problem like that. So, all these properties that your clients buy, Jeremy, when they get the equity out, do they have to go and do renovations? Are they tradies? Do they renos? Are they pencil
a
pushers?
lot of them aren't tradies themselves.
Do they do lots of renovations? Are they doing renovations to them when they buy them? Do they buy a shit box and add the value, or do they just buy it and then rent
They
it out?
rent it
straight
out,
away?
but look, as I say, you make the decision whether you want to be a slumlord or a landlord, because
Yeah.
ultimately, you've got to look after your asset, but you don't want to overcapitalize on your asset,
Yeah,
because ultimately, it is about cash flow.
yeah,
With what you're doing, but at the same time, obviously, you don't want your tenants living in an absolute, place that's falling down. But you've got that. When you get the property anyway, you have the building and pest done, you will speak with the inspector. You
Yeah.
make sure that
The
if there's
property's
any
good.
issues, and we do the negotiation on
Yeah.
your behalf in order
But-
to make sure you're getting it for the best possible price you can. And if you have
But-
to do something, you do it.
But some people watching this will be thinking, oh, you must, to get the equity, you have to do repairs to it, or you have to do a
No, you
renovation.
don't.
Yeah.
You
How many
don't
people
have
would do a repair when they buy it? Like 5% of people would do a
Yeah,
reno?
I'd say there is a percentage, but it's a very small percentage. It's under 10%.
Single
of
digits,
people.
yeah?
Single digit percentage of people, yeah, who have to actually do something
So
to the property, yeah.
your average client would have somewhere between 7 and 12 properties, say
Somewhere
around
between
10.
that, yeah.
Um,
Yeah.
they'd get there in a 3-year time frame average.
I'd say 3 years.
Yeah.
It depends on your comfort level, because I always say to clients, because then not everyone's like you, Nathan, in the sense that they're not there to buy 4 properties at once, and they're not 24. Well, some of them are, but they don't want to. You're going to see, and the reality is, you're going to go and see for those first 3 properties that you do is going to build you a good base, but you are going to see money just flying out of your pocket for 3 months while this happens, and you are going to. But that's why you've got us.
Yeah.
It's because you're going to got people to hold your hand, you take you through the process. There's nothing any client goes through that hasn't been gone through by someone in this office, or another client. We know how to handle all the issues, but by the time they settle, then it's happy days. The money's now coming in.
Yeah.
You're looking at, I've got over 1,000. I've got over 1,000 a week coming in from these 3 properties. Let's go back and do a valuation. Wacko, you've got 100,000 in equity.
That's why it's
between
so
all 3
funny.
of them.
That's why I think we can have fun with what we do, Jeremy. Like we swear, or I swear. We talk about things that are completely fucking out there.
We're
but
contrarian, mate.
We're contrary. Yeah, we're unorthodox with our views on things, right? But the only reason why we have that swag about what we talk about is because we get the results. We're not here trying to go, buy this and have a chart. Like these are real fucking results that are happening on a day.
This is what I love about the clients, but it's also the most important thing. We are very responsible. You have to be responsible for these people putting their trust into us, and we are responsible for building their asset base.
Yeah.
And that's what they're paying for.
Exactly.
They're paying for us to trust us to build their asset base. And as I say to all the clients, who are basically coming on board, if we screw up with buying you a property is not worth, that's the end of the business.
Exactly.
Do you know what I mean? It's not in our interest to give you something that's not going to work.
The more successful we are for our investors, the more that they need to use us to buy us the next one.
Because it's the sequencing that matters.
You've got one of your clients here, Jeremy, saying, "Go, Jeremy."
Marcelo.
So,
Yeah,
What-
it's the most important thing really is because that's what I love. There's very few ways in Australia, unfortunately, of really being able to make a lot of money through passive income and have control over your life.
Yeah.
And property is still, and I've said this before, it's still 50% of common law, 90% of common law, 50% of the Westminster system of justice is based on property ownership, because you are therefore emancipated from government control basically over your life. It's still
from the minute you come out, yeah. I guess the mindset as well, Jeremy. Like I know when I first started investing in a property, I was of the mindset that you get a loan, you pay it off, you buy another one, you work hard, pay it off. And I thought about it after I got to the third or fourth property. I was like, shit, I can pull out equity. And as soon as I found out about equity, there was no Facebook Live back then. There was no internet. There was not even a realestate.com back then. I said, hold on.
And you could pull equity out without actually having to need to service to get it out back in the old days.
Well, it was still a pain. It was still painful. It was still painful. They had cash out policies, so St George would only allow me to take out $10,000, and they crossed all my loans together. It's disgusting.
Yeah,
anyway. It's so disgusting. Right?
Banks always. That's why you have brokers, and that's why
Exactly.
Zinger. They've got to do it because the banks will always put everything in their favour. They say, "I want to do it through my bank." Well, yeah, but are they going to do it in your interest or their interest?
Yeah.
And that's why everything's got to be structured. Make sure that everything is structured so you can build a portfolio and not find yourself stuck after your third property where the banks aren't going to lend you for the next 2 years.
Exactly. And like, what do you think about the mindset shift when someone comes in, they start buying a property not knowing what equity is, and after they've bought like 1 or 2 or 3 or 5 or 10, what's the perception around equity at that point? Like, do you see like a light bulb come on with people?
The light bulb comes on. It only takes a few properties, like 2 or 3 properties, before people realise, oh my God, this is working, and then they come back and you get fewer questions. Yeah. The most important thing to do when people come on board is to sort of like preempt everything and just. That's why I always say, look, you are going to see money flying out of your pocket as this, but the quicker you start and the more properties you get early on, the easier it gets moving forward. If you do one at a time, it's going to take longer. Property prices are moving, no matter whatever they say on Channel 7 or Channel 9 about, there's going to be a bust. They've been saying that ever since 1950, ever since Brian Henderson was on the air,
This is something we don't hear for a very long time.
No, we haven't heard it.
May as well throw Roger Clemson out
Roger Clemson out, Eric Walters, James Dibble. That was the last time I watched television that all these people were on it, only.
So, Jeremy, I've got a few little names here of some people you're not allowed to say their names.
Yeah,
So maybe a few of your investors' sort of stories of what they came to you with, a scenario, a bit of a backstory with them, what they've been up to.
All of them had different, were in different areas of their life. Yeah. Some just wanted to get out of their job. One of them wanted to get completely out of their job and have passive income through property, and was vigilant. They were a different kind, is that they would go through absolutely cross off every single aspect of cent that was going to be spent and how much was going to come in. Use my property tracker to the max. Yeah. Were one of these people that actually wanted to teach other people how to use my property tracker. They were really on top of their game all the time, and they have basically achieved since 2019 their aim of the amount of passive income they're able to.
And they also got them farmhouse.
They got their dream house of what they wanted in the process as well.
I think they should be ready to go. Like, surely they should be ready to go again. So you need to go talk to them. I was thinking about it today.
I will be. I need to catch up with them.
So that's a professional couple, middle age.
Yeah, with grown-up kids.
Grown-up kids. So they had I think from memory, they had like a bad experience with like some off-the-plan property or something. They bought 2. They got stuck. They were like negative equity.
Yes,
shit like that.
And you do get that. Like people who bought. I don't like the word bought badly, but have bought things that are negatively geared that have not really gone up and paid far too much money for it. And therefore, in order to sort of and the property's gone down in value. Correct. Because they bought in the wrong place. So there's no point in them selling it.
Sometimes people will, maybe it's gone up, I haven't looked at those ones. I know which ones we bought. But sometimes people will get stuck and they'll be like, property investing is not for me. But like what I really find cool is when people, have bought that off the plan thing, or they have bought something that was worth a lot more than it's gone down, and they've gone, shit, okay, I can identify what's gone wrong there, and then they hop back on the wagon, they get the strategy that works for them. So
everybody thinks they know what they're doing until they realise they don't.
Yeah.
And that's the thing. The difference is, though, Nathan, is that, as I say, that, we can get you to El Dorado and we know the road to get there.
Yeah.
Yes, branches are going to hit you in the face. Yes, there's going to be potholes. Yes, if it was easy, everyone would be having, would have multi-million-dollar property portfolios of 6 to 10 property. Everyone in Australia.
And we
would.
need tenants.
Yeah.
We need tenants, so we don't want everyone buying them, but it's it is what it is.
But that's the reality of
The system.
of the system.
Mindset. So you've got a young bloke. So that's a more mature. What about the young bloke? What did he do?
Young
when
bloke, he was a fitter and turner.
Yeah.
Lived in regional Australia. He's now
came
got
to you with
11,
less than six figures.
Oh yeah.
When he came.
Yeah. He's on 90.
Yeah.
Okay, he's had I think a bit of a boost in income, since then.
Look at this. We've got Lisa here. We pulled out 400 grand
Look
from
at
our
this.
property after 18 months. Thanks, guys. That's right, Lisa. It's a really cool result. Tell me about the fitter and turner bloke. So
Yeah, look, I mean, he started, and he again was vigilant going through all the properties and stuff, but he very rarely said no to anything that you came
He
through.
was very scared. I remember he came in, he was so concerned, he'd never done anything like it. The family hadn't done anything like this. He wanted to set himself up. Mum really encouraged him to do it. It was a big leap of faith when he came in. That was like 2019, yeah?
Yeah,
2019. And
Yeah.
how many's out now?
I think he's 11
11.
properties.
11 in 3 years. Got a big scam that's gone on. He's on, big scamdemic that's happened. We've got, the world's changed. Most people went in their little shell. This guy's
Went
gone
through
out
it in blue.
and he's gone on and got 11 properties in 3 years on less than 100 grand. No fucking silver spoon. No, big helicopter dump of money.
Yeah, and I will say that within these properties, there's always bits of equity, but you will hit upon with those when you start out in the first 3 or 4 properties. There'll be one property that'll just give you an absolute
Yeah.
shitload of equity. You're gonna hit that cash flow.
Yeah.
With one of these properties.
People sit there quite often and they'll go like, "Oh, I'll just buy one for like
At one
400."
at a time, I'll do, yeah.
But
Well,
then
yes.
you don't know which one. Like you go, okay, we'll get 3 of them. You put in 3 fishing hooks in the ocean. You can catch equity. Like the guy that we're just talking about with the 2 properties, the one that we thought was going to catch the equity didn't catch it, but the one that we didn't think was going to catch equity caught it.
You always have to deal with that. Everybody's an expert when it comes to property. One of the reasons I believe that in Australia everyone's obsessed with property. It always goes back to our Indigenous brothers and sisters who always talk about country, how important country was. Country's so much important in the Aboriginal mythology. We've just transformed it into a more, I guess, capitalistic idea of real estate is like an obsession in Australia.
We'll
like no other
commoditise it
country.
with loans, with paper contracts, which is what the whole system's
The
based on.
reality is based, but at the same time, it is very important to people, and it's the only thing, it's a tangible asset, and it's the only thing that that we can hold on to and utilise. Everyone needs a roof over their head. There's no question.
Yeah. Cool. What other things could you talk to everyone about?
About where they buy, make sure that they diversify their portfolio in the areas. They don't have everything in one area. Which we're good about, and that you've got to be able to do. It really depends on whether they need cash flow and what they need, because no 2 portfolios are the same. Everyone comes with a different story.
So I've got here some questions. If someone's got questions for Jeremy, we'll ask Jeremy some questions. So we've got here someone saying the government, the Queensland government, any government, they're poking their finger up. We understand, calm down. Andrew said, no, you don't have granny flats. Matt said, a lot of other property companies, there's spruikers, there's investors that promote subdivision and granny flats. That's because they're getting paid a fee for being able to build you those things. They're trying to sell you it. What governments and magicians have in common, I think it says. I can't see it, the message is gone. They both say, look over here while they screw you over there. Probably, yeah. What would you say to people that believe units don't grow the same way as houses do, Jeremy? There's a question we've got there. It's a very good one.
What do I say to them?
Well, realistically, what what's the difference between a house and a unit? Does a house go up more than a unit, or does a unit go up more than a house, or do they go up the
I
same?
haven't noticed they go up the same. It depends on the area. It depends where
Yeah.
you are. You know?
Location, the
Like
value when we
everything.
jump onto the deal.
Yeah.
There's houses out there that have gone down in the last decade. There's properties that have gone up, a lot.
And there's and with houses, there's more wear and tear because it attracts you're attracting families. You're responsible for absolutely everything in the house. The cost of maintenance on a house
It's
is
so
far
much
more
more.
than the cost of maintenance on a unit.
Your cash flow on a strata property is so much greater than it is
Because
on
on a
a
house.
Torrance title house. For $500,000, you could buy, let's say, 600 grand house. I saw some video today on the internet. It said about buying a house here or a house there for the price. I don't care about that. I think for 600 grand you could buy a house, but for the same 600 you could buy a 200 grand property. So it might be a townhouse, a house, a unit, a villa, a duplex, whatever. We did a triplex yesterday, 3 units on one side for 330 grand, right?
Yeah, I
And
saw
that's
that.
yeah, a rent on it's like $700 a week, something like that. But you could buy 200 grand a piece times 3, and those 3 properties could go up to double from 200 to 400 very easily.
It's like doing $1.4 million house going up to
1.6. So
yeah.
if we look at the entrance, Long Jetty, we look at Brisbane, look at the Gold Coast. I was talking to one of my mates the other day. I won't say his name. He's probably in here watching. I was talking to one of my mates the other day, and he said, "Thanks a lot for buying me a property in Toogan." Right? Toogan, where the fuck is Toogan? Right? When I bought there, I was
Yeah.
like, "Where's this suburb?" Right? It was years and years and years ago. It was like 10 years ago. I bought it for like $190,000 for a 2-bedroom unit. It's in the Gold Coast, little suburb, under the airport, near Coolangatta. It's
yeah.
under the runway of the airport. Most people imagine someone coming in. They go, "Oh, I don't like the property because it gets plane fuel on it." Right? Imagine someone saying whatever. Right? I don't want to buy the property. He thanked me. I'm like, dude, you're the one that fucking signed the contract. You're the one that took the action. You're the one that made the decision. You're the one that parted with your money. And he goes, that property, it just got revalued for 650K. It's a shitty unit. It looks like a knockdown job.
At
And
the end of runway 3.
at the end of runway 3, right? So you never know, just like what you were saying beforehand, Jeremy, but like that's gone up 3 times. I know of houses in the Gold Coast that are 500,000 5 years ago, and now they're worth 700,000, even though there's been a big boom. So don't get caught up whether it's a house, a unit, a townhouse, a villa. You need to look at what your strategy is, would be my answer. Would work out what your strategy is and work out what vehicles you need to get there. If it's a house, it's a house. It's a unit, it's a unit. It's a townhouse, it's a townhouse. The property is purely a vehicle. It's not the destination. So, as
It's a
Jim,
means. It's a means to an end of where you're going. It's never
Yeah.
the same thing. And it's the people get very and the thing about real estate people loving it so much is that it's such an emotional thing, and so they'll look at it, and you have to prepare people for, look, it may not be the most beautiful villa on the that you'll ever see, but everything is mathematics. Everything is money. You know. When it comes to your investment.
Mally says here, in a normal market, doesn't land bring more equity than units? No. Looking at all my investing over the last 15 years, a very common misconception that people think the land goes up and the unit or the house or a townhouse or whatever doesn't go up in value. I think it very much does go up in value. And if I look back throughout my whole portfolio, areas that have bought houses, what a house and a unit were selling for at the time and what they're worth now, they would have come equal on par, but the cash flow from the unit or the townhouse or the villa would have gone up far greater. In some areas, I've got houses in the Gold Coast in Southport which have gone up from, 500,000 to 800,000 or $1 million, which has gone up. Still, it's doubled, but I've got units just like that last example, so it doesn't really.
But people are also using the example of when they bought a unit, which they had quite a long time ago, who'd spent on a new unit in one of the Meriton jobs in Church Street, Parramatta, on the 18th floor, and spent $800,000 on a 2-bedroom unit. That's what people, when they think of units, that's what they think they're going to be buying, is that body corporate fee.
That's a very good point, Jeremy.
With elevator and and a high rise and swimming pool and gym and all that, yeah, that is a bad unit. But I wouldn't be buying a unit like that myself either.
You want to see value in whatever you're buying, whether it's a house, a townhouse, a unit, a villa. Put simply, in Sydney today, I don't see any value in housing. There's no value in housing apart from either a big acreage, which you have to spend $2, $3, $4 million for minimum, or if you're buying specific certain units, 1 or 2 bedroom units in certain areas.
It's
Besides
always
that,
the areas because you're automatically negatively gearing yourself buying almost anywhere in Sydney. That's one of the good things about when we buy in Sydney. It's not a negatively gearing
there's
option.
still positive cash flow sometimes.
Yeah,
So
sometimes
most of the time,
it's
the
neutral.
positive, neutral to positive cash
Yeah.
flow. It's still not negative cash
which
flow.
is unheard of in Sydney.
Exactly.
But it's always going to be the doormat to the country, so you're always going to find equity.
Matt asks, does Jeremy do your articles for Birchfeed? No.
I submit some of them, don't I?
Oh, occasion-
Don't,
no,
don't, I,
occasion-
don't I send some through and you put them up on Birchfeed?
I used to occasionally, but like keep
Not
sending them over.
anymore.
No,
Well, I
like
haven't been sending them.
if I put stuff on Birchfeed, like I could post like a shitload of things that could go into Birchfeed, right? But the one thing that I've realised in the last 18 months since people were doing these things is
Going
that
to the Jabbertoire.
the the Jabbertoire, is that people will sit there, like if I post some things, people will get scared from what I'm going to post because it won't be really pretty, and it kind
You've
of
got to balance it. You've
it's
got to balance it
yeah, I
out.
don't want to just
It's-
be, we could put in debates about, is the Earth flat or round or different things like that, but then it's like, what's,
It's got to be what's going to affect your portfolio.
Yeah, exactly. I could put in all different stuff. I've talked about the food. I've talked about the chemicals. I've talked about chemicals in your food years ago. Do you remember I was talking about people growing
look,
food?
all I can say is that it said everybody, if you can possibly just start growing your own, as much of your own food as you can. With lettuce being $6, this is insane. I spent
Exactly.
$7 on a bunch of basil yesterday.
There's a shop called Oakville Harvest you should go to.
Where is it?
Oakville.
I don't know where that is.
There's near the farm that you.
Oh, up in Moravia,
Yeah,
that area.
yeah, Oakville. So,
With the petrol prices going up, I better get there quickly.
probably.
Jerry cans of diesel.
I'm building a house at the moment. So Michael, he just said I'm building a house at the moment. Went to increase the construction loan by $50,000 for a few extra things to be done, and I got refused. I'm getting assessed at 8% interest rates. They can suck me off. Your words, not mine. But that is what's happening out there. That's why I wouldn't want to build, because there's all these issues. Imagine now that we're seeing interest rates go up. Someone that's bought land can't build. You've got builders going broke. You've got all these things. There's going to be there's musical chairs.
You've already got a quote for this much,
And it's gone up.
and you've already they've already quoted, they've already signed up on this. They already know that it's going to be $200,000 more
Yeah.
to complete your build than what they quoted to you 6 months ago.
Exactly. And I've got mates that are builders. I was talking to one of them the other day, and he said that he's putting up prices. He goes, I've committed to contracts, and he goes, I'm asking people, he goes, 50% of the people agree, and he goes, this is what the timber was worth when we quoted it, this is what it's worth now, can we meet in the middle? And some people are agreeing to it, and it's like, that's a builder that's going to last for longevity, right? You don't want them going broke, and that's what's happening around the place out there. So, Andrew said most properties come to Blink to lease as is. We recommend a maintenance schedule after the first inspection, which is very important.
Yep.
Lisa said we pulled out 400 grand. I even gave you a like there, Lisa. This you guys are really awesome with what you're doing. You should be proud of yourself, and I think a lot of people will be jealous. You've got lots of likes there as well. Angelo said, great evening, gents. I hope you're doing well, mate.
Hey,
Josh.
Angelo.
So Nathan, the land tax in Queensland, your opinion is it doesn't change anything. Don't let it defer people from buying property. Look, you can let the government try and rule you, or you can just move on with your day. Try and find ways around it. I might actually pull Ridwan into a live one day and talk about different ways of using vehicles such as trusts and stuff like that. I'm not a big fan of trusts, and it's not necessarily that's the right thing to be doing, but there is other options there to try and minimise that. But as we can see from the article from the Queensland government, it says here, that line there, it goes, You will only pay land tax on the land you own in Queensland. We are not taxing your land outside of Queensland. So what they're doing is that they're adding your land value from other states, and then they're charging you at a higher rate of land tax. So yes, you will be getting screwed from the government. You will be paying more if they do find out that you've got the properties. But hey, they need you to tell them, hey, I own properties elsewhere, right? And it's like, why the fuck would I tell you that you can try and rob me? If you're going to try and rob me and take my money, you can try and do it in a. You're going to have to go on
It's
a cut
so
and mouth.
corrupt.
It's so corrupt,
The
right?
system is
It's a
corrupt.
self-admission. So, firstly, I'm not going to fucking tell them. They can get stuffed. Secondly, if they do find out, well, then it is what it is. And it doesn't mean that, imagine all those poor tenants, there'll be owners out there that are going, I'm not going to buy more properties in Queensland, so there's less rental properties when they've already got a rental shortage. Other people like myself, all the thousands of people that I manage their properties for, just going, hey, let's put your rents up, right? The tenants will be paying more. So this is only causing more and more pain. It's causing more inflation. It's like the guy with the coffee shop. All those businesses are getting themselves into trouble because of the elements that are facing them in the world that we live in. And this is just another element that the government is there trying to claw their way through, which will end up being passed on to that end user. So yeah, I'm not too concerned by it. Chris, interest only or principal and interest, that is a call that you need to make.
Yes, I tried calling you today. Look at showing your age. Showing my age, you've got a landline.
Look at this guy. So Chris, with interest only or principal and interest, I'm an interest only fan until it expires, and then you just let it roll into principal and interest. But the way I look at it is, let's say for instance, the worst investment that you could make is if you're paying off your mortgage and it's 3%, 4%, 5%, whatever the interest rate is that you're paying, you can either have that money in your bank account and go and invest into something and get 10% cash flow with it, or you could just go and put that off and retire debt. So if I had $1 million loan or a 100 grand loan, let's say I've got a 100 grand loan and I want to pay that off, I have to go and earn money. So I have to earn 150k, lose 50 grand from the Gestapo that are trying to take the money away from me, i.e. the tax man, end up with 100 grand, go and pay the 100 grand off my mortgage to save myself 3, 4 or 5% interest. With doing that means that then I save a few bucks on interest, but my 100 grand, if I had in my pocket, the inflation that I could use, things that I could buy that get inflated away, the debt becomes irrelevant with inflation. So your return on your money at saving yourself 2 or 3% return, you could have got a much better return for your cash on cash return. And that is not financial advice for anyone. Everybody's position is different. So, reach out, start a call with us and see.
Exactly.
Maybe answer Jeremy's call.
Yeah.
Whoa, what's going on here with the screen? Oh, the screen just
But
dropped.
and even if you in your liquidity, you should have it in some hard asset other than cash. You could put it in gold or silver, whatever, something, so long as it's
Darling
liquefiable.
just said, how does this work? Do you guys check our files and call us if you think you have some equity to pull out for another property, or do we call you and ask to check?
No, we're constantly reviewing areas where we've sourced for clients, and if we see someone's got a valuation in an area that is just unbelievable through the roof, we go through and find out all the
Anyone
other
that's
clients.
bought in that area, anyone that's
say,
bought in
"Hey,
the block,
listen."
anyone that's bought in the street, yeah.
Yeah, we keep on top of it. Phone doesn't go dead. Just as soon as we get the agency fee and abort your property.
I've got someone that watches the videos quite regularly. Actually, if we look at Lisa, right, that just said she got 400 grand. Lisa didn't
She's
come
awesome.
to us and say, hey, Nathan, can you check my property for equity? I turned around and I said to the team at Zinger, hey, I think we've got some equity here. Checked it out. They had a chat with Lisa. Lisa's come back and said, yep, I want to go ahead with that. Suddenly we've got 400 grand in equity. Suddenly we can go and buy a couple of blocks of units, all those sorts of things. So it is not that, it's a conversation that we just continue having and as we grow out the portfolio. So.
And the other thing is a lot of people say, I've been advised to go into commercial. They love commercial.
So many, well, we've seen what commercial does. Let's look at Sydney CBD. Blue
aren't
chip
you glad you bought that blue chip
commercial property, right? Aren't we glad that we got
on
the commercial
Crown
property?
Street in Surrey Hills?
Won't survive. Businesses in Sydney struggle as workers turn their backs on the CBD. Before Corona, blah, blah, bustling CBD would have booked out on Fridays, right? We all remember that story from earlier on tonight. Imagine having that commercial property. Good on it. Gemma said, both Wayne and will be keeping an eye out on it for you, but doesn't hurt check out with the bank. exactly. Is there any benefit, downfall to owning real estate in multiple states aside from it not putting all in one basket? Not all of the markets go up linear. There's counter-cyclical markets. So, for example, Sydney went off for many, many years, and Queensland was doing dog shit. People were laughing about the Gold Coast and Brisbane. I was on the Sunday night channel. They did a documentary. I was in the helicopter going over the Gold Coast. It was like a half an hour documentary on the Gold Coast. And I said that when the Queensland market, when the markets take off, when monetary policy becomes easy and markets take off, that the Gold Coast, Southeast Queensland would be the first market to take off and be the biggest takeoff point. It was that. And Sydney, everyone goes, oh, Sydney's gone up crazy now. There's still properties in Sydney which are cheaper than what they were 7 or 8 years ago. You can't find that in Brisbane or Gold Coast or anywhere
Everyone's
like that.
moving, like Victoria and New South Wales, everyone's moving up to Queensland.
So it's finding those markets which are depressed at the time and being able to take advantage of that. Des says, I've got equity but poor tax returns. Is Des one of your...
There's Coleman, yeah. I left a message for him just 2 days ago.
That's the one he said. Oh, yeah, I know who Des is, but yeah. So give Jeremy a call. Let's see what we can do with getting your equity there. Wayne's jumped in as well.
Hey, darling.
Lifting migration will bring 2 challenges to Australia: migrant income and residency. Significant welfare needed more and more. Could this potentially start of hyperinflation? Well, it's just going to put more demand on the infrastructure that we've already got. It's going to mean that we need to build more housing at the higher level of pricing, and then it's going to put up a pent-up demand to push.
Potable mills online. You can get them online, and you can go on YouTube. You can see them being demonstrated.
So Kane asks, where can you buy a portable mill from? I know specifically Kane specifically has a need for a lot of... If you,
I'll show you. I'll get your email and I'll send you the clip you can see, and I'll show you the mill that we got.
Yeah. Steve said here, Alba Sleazy confirmed today Australia has no plans to stop export boom, especially coal and gas, to your point earlier.
China's with the global quarry.
Exactly.
We are just a giant... Mexicans with mobiles, they used to call us.
Mexicans with mobiles, never heard of that. But the reality of it is that that's where the opportunity has been. We've been buying up all the mining assets. I remember going to places like Gladstone and stuff like that a few years ago, and the markets turned to shit, and we're picking up that guy that I said, this one here, Jeremy. I bought him a unit there for 50k, right? A 2-bedroom unit in there for 50k, and now they're all like 200 grand a piece. They've quadrupled their value.
It's a major port anywhere where there is major activities.
Yeah.
And they're centrally located. They're always going to do well, even if the place goes down, even if there's a huge depression. It's going to affect everywhere.
Yeah.
So long as you're not buying in places that are in the middle of the Simpson Desert,
yeah,
that only have one type of mine in it.
Exactly.
All the places have a rural factor in it as well.
So tomorrow as well, we're almost finished. It's been almost 2 hours. Tomorrow I have a guest for our webinar, the writer and author of this book, The A to Z of Money, talking about getting kids started into investing, into money, how to educate your children. There's children of all different ages out there. A lot of the time parents come, and it's something that they don't do nowadays. But when I first started this business, I was like 25 years old. And Jeremy's here.
I could learn from this.
It's good, eh?
Joint venture. You sit down and you can colour in these great illustrations too.
Exactly. So, how you train your Jeremy, come on.
H for hedged.
We'll keep it all for tomorrow night. The A to Z of money. We'll be talking about, a lot of parents, back in the old days, people would ask me, hey, can you talk to my kid? And all the kids would hear is that I failed every grade from kindergarten to year 12, right? I got 32.8 in my UAI. I think it's called like an ATAR or some shit now. I didn't care about school. And then the parents would bring their kids in. I would say those few things. And then the kids would go home and say, I don't need to do homework, I don't need to do this, I don't need to do that. Birchie drives around a Bentley, Birchie's successful, he's on the TV, he's doing all this stuff. And it wasn't really the greatest thing because the parents had created a monster then by bringing him in, right? But the reality of it is that having having kids at all different ages, people ask me what could they be doing. Tomorrow we're going to be going through that. We're actually multi-generational here. Like we've got people that have started out, mum and dads that have built a portfolio of 5, 10, 15, 20 properties in their portfolio, and now they've got children that might have been 10 at the time, and now they're 20, or they're getting a job, and their kids are getting their first property, getting their second property, and they, how can they set their kids up to have the right platform to kill it in life?
I'd say it was one of the most important things you could do.
Yeah.
I never got that.
Yeah.
So I can tell you quite honestly, it is one of the most important things you can ever do, is to explain your kids money, other than it comes out of a wall and it's endless.
It's the little digits that get printed on your screen.
It just comes out of the wall. You just put money, you put your plastic thing into a wall, and money will be spat out at you.
Yeah.
That's what I always thought money was.
Well, that's the money is a mindset, and however they get it. We'll be talking about different ways of getting it, obtaining it, different streams of income, scenarios where people have only had one stream of income and it's caused an issue, and different things like that. So there's a link in the description here. You can click on it, get access to tomorrow night's webinar. I'll have the author of the book coming in to talk about that, and it'll be an interesting webinar. If you do want to chat to Jeremy, you can reach out to him, 1300 367 925. You can email the team at admin@binvested.com.au, reach out to Jeremy and have a chat with him, have a 15-minute chat with him.
Or any of the team. They're all wonderful people. Great.
Some people, it's like last week, the week before, everyone was like, hey, Charlie, I want to speak to Charlie, right? And I know, Jeremy, when you're here, you're like it's like I'm rolling out a different person here, mate.
Everyone's got their own way of dealing with people.
Exactly.
Everyone's got their own personality.
People just some
just
people, I know when I speak to one of your clients, they're probably going to be saying to me they hate the jab and stuff like that. And I speak to someone else's client, I'm like, they're a different type of person, right? And so
I think most people who come on board, Be Invested and listen to you, Nathan, are probably pretty suspect of going to the jab abattoir and getting injected with sort of like another DNA of the zombie apocalypse. I don't know.
Well, they're not all, Jeremy. They're not all. Like your one's more specific.
Hang on, I'll write down my number. How about that?
We can't write your number down, Jeremy.
Why not?
No. It's 1300 367 925.
Oh, right. Yeah, call that number. Ask for me.
Ask for Jeremy. Just reach out.
Or Charlie, or Wayne, or Gemma, or
send us an email.
Pat.
Any of the team. But I think a lot of people just want to. They're like, Jeremy, I need to learn something from him. Do you have?
I can tell you what to do with. I can help you with money. So once you've made a lot of money, what else you can do with it is also a very good thing to do as well.
What would you do?
Look, I think you buy into assets when you buy things that are of value. Say, in terms of furniture, not just buying silver coins, but buy silver things you can eat with. Buy beautiful furniture. You appreciate art. That's the other thing too. Is
buy a timber mill. Buy a timber mill. Make sure. But that is a basic thing. Is to have your own water supply, have your own wood supply, have your own petrol. This is just basic. So you're not a slave to the energy companies. One of our investors, I was doing a map session one day, and he's a geologist, and I was like sitting there and talking to him, and I said, I've got a block of land out here. He's mining gold. And he has found there's some gold exploration, and the property that he's mining is right next door to my property, right?
You can have gold on your
I've got to have a gold mine, right? Of flowing gold. I knew I went there, and I was like, there's gold here, right? So I've got some mates that are physical gold, quartz quarries, where it's like literally it's all quartz, a whole yard. The size of Kellyville is 1,250 acres of quartz.
Just all you need is a lithium mine.
Well, whatever
it's going to happen. There's so much gold in this country that if they were to mine the gold that is actually in Australia for reality, would reduce the price to the level of tin. We have so much gold in Australia.
Yeah.
They even have to cover it up once they realise, because they're looking for rare earth minerals or whatever, which is you know, is called rare earth for a reason. But the amount of gold we got in this country, unbelievable.
So, just a couple of little questions. Simon just asked, how does one get involved? What's the cost? All different ways that we can help. Last week we had the finance team on. We've got property management, we've got acquisition, we've got strategy. Probably the best bet is to pick up the phone, send us a private message, or send us an email. So you can call 1300 367 925, email us at admin@binvested.com.au, or flick us a DM, be in chat. Jeremy wants to hand out his private number.
I want to hit. No, it's not my private number. It's the number of it's the company number.
It's the company number, but I'll also get my nuts kicked in for.
Oh, really?
Yeah.
You will, but you're the boss. How can you get your nuts? You rule, Nathan, don't you? With an iron fist.
I don't rule with an iron fist. I rule.
You gently, calmly.
I make it
gently,
hard to tell the
friendly.
difference between the general by working like a soldier. I hop in the trenches, and
you hop in the trenches. You're
the people that we have around us are experts at what they do, and we've got processes.
Everyone's good at what they do.
So that's why we hand out the 1300 number, which just again 1300. It's 13. I've said it on every video for the last 10 years. Like it's 1300 367 925, and email us, and they'll put you through to you, Jeremy. We'll take a message. I'll get you a call.
Yeah, please.
If you're not in,
or everyone's good. Everyone is. Will look after you like a dream.
If you want to chat to Jeremy, just send over the. There we go. Gemma's posted in there. There's a landline there.
Oh, there's a landline as well. There's a landline as well.
There's many numbers, Jeremy.
I hear it going off. I wonder who that's for.
So, thanks a lot for tuning in, having us a part of your Tuesday nights. Thanks a lot for being here tonight, Jeremy.
I love it. Always great. Always a pleasure.
It's always great.
Always good, Nathan.
We'll catch up soon. See you next week. See you tomorrow.
See you soon.
Bye for now.
Bye.